Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is August 10th, 2022, and I'm coming to you live for the first time in a long time in the morning for a very special live stream. This is a very special occasion, my friends. And I'm going to get into why that is. Has very little to do, actually nothing to do with the CPI. It's just that we are very likely to break major resistance in the immediate short term, okay? We're very likely to break major resistance in the immediate short term. So I want to share the occasion with the community. And I also want a format that is a little longer than the usual brief daily update of, maybe 15 to 20 minutes. So, yeah, this is a very special live sort of occasion, right? We're going live in the morning on Wednesday. Lives are usually on Tuesday. But yeah, I'm very hyped. I'm very excited, right? Obviously, everybody's talking about the CPI and whatever. It's about 9 a.m. Eastern Standard Time in DC, where I am. And, those numbers have not yet been announced. But the move preceding this pump to the upside has been forming, as I've, been kind of detailing and outlining on this channel. So, I guess, for people who really are attached to the idea that the market moves on news, you can't really disabuse people of those notions and those concepts, whatever, it's fine. But, people who really understand technical analysis and how technical analysis works knows that the charts are self-sufficient. And that move was printed in. Now, is there some coincidence in the fact that the CPI numbers are being announced today and that move was initiated some days ago or last night, however you want to say it? Perhaps. But this is not the first time the CPI numbers were announced, okay? And so the old saying, show me the charts and I'll tell you the news, kind of resonates because there's always some quote-unquote news or fundamental factor that's affecting price. You can just pick and choose, and it's kind of like a confirming bias. I don't know what the term is, but something happens and then post facto you say it was because of that. Not really, but it doesn't matter. It really doesn't matter, because at the end of the day, good technical analysis relies on the chart. Anybody telling you that, oh yeah, I'm doing technical analysis, but watch out for what the CPI does, it's not technical analysis, okay? It's some other kind of analysis, but it's not technical analysis. Technical analysis is chart reliant, and exclusively chart reliant. The only reason the only reason you take something into account that's not on the chart in technical analysis is when there is a fundamental, and I'm using this word quite literally, a severe fundamental change in the underlying asset, meaning somebody rugs the token and sells all of it, yeah, and dumps the token, and then, that will literally directly affect the valuation of the underlying asset, and so, the chart will reflect that, and it'll be a huge red candle and a dump. Or somebody buys like an astronomical amount, and there is enough supply, and there that affects the market. But like, those are black swan events fundamentally changing the tokenomics, right, suddenly, of the underlying asset. So this is why charting works. If charting didn't work and it was really news dependent, then you'd have tickers all over. And how could you have such regularity in 5 waves up and 3 waves down? It would be, no, 5 waves up, but if Powell says this, then you don't get it. You know what I mean? Like, it just doesn't work like that. And people don't really understand what technical analysis is, which is fine, more for us. It's easier for us, right? People are waiting. Is this going to break up or is this going to break down, right? We're waiting for Jerome Powell. Like, that must be miserable, having to wait on the news and thinking that a token's only going to move based off of some external sort of news event, like, I wouldn't be able to trade, then that's worse than gambling, right? Like, what is that, you know? But anyway, let's see who's here, if anybody, because this is impromptu, completely impromptu. Did not announce this. I didn't even know I was going to do this. I just got really excited when I saw the move that, you know, I'm not going to say I predicted, that I thought was likely, okay? Because there's no predictions. It's just, you know, we're reading likelihoods. Okay, let's check. Who's here, if anybody? Definitely, if you're here, like the stream, shout yourself out. Let's chill. You know, I'm not going to say I predicted. Okay, here we go. All right, we're live. How long do you think the news will affect the price? The Brecca says. So, the Brecca, I don't know when you posed the question, but I precisely don't think that's the case. Okay, I'm not in the camp of the news affects the price. I think the charts are the charts, and there's always going to be news, and there is such a thing as confluence of chart moves with news, given that the chart is nothing but the emotions and the sentiments of the people, right? So a lot of people think that the news is going to move the charts, and the charts reflect the buying patterns, selling patterns of the people. Therefore, the charts will reflect that. But I don't think the news is moving the price. Like, if you're subscribed to the channel, you'll know I've been looking for this for quite a while now, right? And if we do break this, this resistance that I have in this blue box, that'll be a break of a 52-day resistance, right? So if the chart moves to the upside on this, okay, and you know, there's some serious technical analysts saying that this, which, I mean, I don't know if you can get a more clear cup and handle. I mean, it's quite bullish, right? It's a very bullish pattern where you're testing once, you're testing twice, you're testing a third time, and each time you test, you make a higher high, right? You're making a higher high every time. And there's some serious technical analysts saying that, one, you're not going to break this resistance at 25K, and two, if it does go up, it's only going to go up to 28K, where the measured move of this pattern is obviously, very clearly 30K, right? And some people are like, there's no way it goes to 30K, right? And maybe it'll go up a few percent on the news, like, you know, fine. I mean, I'm not complaining, but it's just like, I don't know, it's clear as hell to me, right? That's the measured move right there. If you just do pattern analysis, keep it simple, right? That's charting 101. You take the pattern height, you measure it from the site of breakout, and you get that top target. And then also the VPVR has been screaming this for ages, that there's a void between where we are now, 24 and 25, and 30K. So if we do get into this region, it's kind of, you know, already printed that you're going to do the 30% to the upside, and you're going to get here. It's like quantum levels, right? This level and that level, there's nothing here. So, like, this is just a void, right? So, I don't ascribe to the notion that the news affects the price. The news hasn't come out, and I understand how it works. Some people say, buy the rumor, sell the news. But again, a move, and people who study Wyckoff know this very well. Any move has a cause. You don't just get a move out of the blue. You need a cause. And part of good technical analysis is being able to read causes for moves, okay? So, like, for us, you have this A wave, this B wave, another A wave, another B wave. So 2 degrees of consolidation reversal. Then you can start your pump in earnest. So you have 5 waves up, 3 waves down. 5 waves up, 3 waves down. Consolidation, you continue with your third wave of this third wave. So this is wave 1. Now you're in wave 3. So 1, 2, wave 2 is this right here. So this is basically wave 3 of 3 that you're going to hit. Okay? And I think what's going to happen on the 11th to 14th, you get a minor retracement in this region for the full moon, okay? Because the full moon usually represents a nadir of price, okay? So between the 11th, which is the start of the full moon, to 3 days after, which is the 14th, and the data shows that between the 0th and 3rd day of a full moon, you typically get a bottom, a nadir of a market move, okay? So we can expect, just, you know, by data probability, to get a move like this. It comes down here between the 11th and the 14th, and then you make your last wave. So basically you see 5 waves here. Here, let's just point that out so people can understand really what I'm talking about, because I'm just scribbling now. Guys, if you're getting value, please like, share, and subscribe. So what I'm trying to say is this. 1, 2, all of this after 2 is consolidation reversal, your AB base. So you should get like this, something like this. This is what I'm kind of talking about. And so maybe on the 14th, 3rd day after the full moon, something like that. And then finally your last wave to come up here. Maybe it's extended, but at least break this resistance. And so if you check your Fibonacci extensions, you go like this. The length of wave 1, retracement of wave 2. Wave 3 comes actually to between 1618 and the 2. So I wouldn't be surprised if wave 3 went all the way to 29.8, got rejected because this is crazy resistance, right? And then did something like this. Now, we spoke earlier on the channel that you could also expect a deep retracement, okay, because, you know, it's not surprising if you get some sort of leading diagonal. But given the time frame, given that it's taken us this long to retest this resistance, I wouldn't be surprised if this was a shallow retracement in wave 4, okay, and you just got something like this, right? So that's what I'm seeing. Yeah, I think it's very likely. This is, look, and okay, by the way, just so you understand, this is wave 3. These 5 waves are the intermediate wave count of wave 3. So this is wave 1, just for clarity, right? So everybody gets it straight. That's wave 1. This is wave 2. All these 5 waves are wave 3. Typically your most impulsive and your longest Elliott wave. And then I expect wave 4 to come back down here, or even wave 4 can even go deeper. Do you see what I mean? And fulfill that leading diagonal that we said is likely to retest this long-standing resistance that you just broke. And then wave 5, right? So, and you have your symmetry, your inverse head and shoulders. We've been saying this for a while on the channel now. So like the idea that the CPI data is, you know, what's causing this is bullshit, because we have been looking at this, and I mean, just look at the videos. I've been saying, like, it's very likely that, you know, sometime soon we break, sometime soon we break, sometime soon we break, and that's pretty much been the narrative on the channel. Yeah, I'm excited. I'm really excited, guys. Look at this. Oh man, this is why I do what I do. Like, it's tough as a professional trader. It's 9 a.m. Most people are checking into their jobs, right? Or, you know, signing into their jobs. And this is my job. And the tough part about trading for a living is you don't get paid regularly. You can trade on short term, but, like, you know, when you're doing it professionally, you have to really be good at managing risk. You have to be careful. If you're going to try to get paid regularly and trade the small time frames and try to trade something like this up and down, you can do that, but you're going to likely have a higher failure rate, right? Your hits are going to be less. Like, if you trade higher time frames, more likely moves, right? You're going to have a higher win rate, but you're paid, instead of getting paid every month or bi-weekly, maybe you get paid once every 2 months or once every 3 months or something like that, you know, depending on the cycle in the market. But that's the tough part about this that a lot of people don't understand. And you get paid. When you get paid a bunch. And then maybe you don't get paid for a while. And then next time you get paid a bunch. But yeah, you know, on this channel, I've been talking about accumulating here. I've been accumulating positions, spot, leverage positions. I've been accumulating ever since last night. Even this morning, I accumulated, right? Accumulated just for these moves. That's why it's so exciting, because it's like I finally get paid for the first time in a while, because I haven't been fucking around. I've been, you know, the guy trading on the 5 minute, the 1 minute, the 15 minute. I've done all of it, right? I've traded long term, I've traded short term, but like doing it professionally, like I have my risk measures, my mitigations. I have some, most of my money tied up in spot, but some leverage trades, right? The spot trades, they can never get liquidated, obvious times. Like really reading the high time frame market moves and waiting for this break of resistance that in Bitcoin is right now a 52-day break of resistance, right? If you break resistance that's taken 52 days, I mean, this is just the beginning. That's why I'm saying, like, you know, don't be surprised to get a daily 30% candle, a God candle that's taking you from this point right here all the way here, right? It will have taken you 52 days, but you finally got that. And, you know, even if you don't take profit, it's cool because this trend is going to continue for quite some time, okay? Because remember, this is 1, this is 2, this is 3. You get 4. Even if you get a deep retracement of 4, you still don't have 5 waves. And then even when you get that 3-wave retracement after 5 waves, you're up on your trades if you were getting in down here. Do you see what I mean? And then that shit just keeps going and going and going. That's wave 1, the larger wave 1 of 5. And then you just accumulate. And that's what the definition of an up-only market is. It's exciting. It's really exciting. But then that's, you know, the fruits of our labors, you know, poring over these manuals, you know, Elliott waves made simple, and the wave theory, you know, Prechter and Frost, and, you know, reading and back testing, all that stuff. Like, this is where it all comes in, that you're able to go on the 4-hourly time frame, the daily time frame, and see this as a bullish consolidation reversal, know what an AB base is, be able to read 5 waves. Look at this and see that's impulsive price action. There's no doubt about it. Know that the impulsive price action started July 13th, only counting 1 wave, 2 waves. Know that you're in a primary 3rd wave. Like, all that shit plays into now. It's not about trying to trade the CPI data. If you are getting into the market because, you know, you're on crypto Twitter and you're thinking, oh, everybody's hyped for the CPI data, I should probably buy or sell. Something's going to happen. I can make money one way or another because a move is going to happen. You may get lucky and get into that long, but, like, you know, if you're chart illiterate and you're not market savvy, how are you going to manage this? You're probably going to sell out here, right? Because you don't know any better. You think, oh, it's over, and, you know, somebody says it's going to dump. Somebody that has a lot of followers on crypto Twitter says it's going to dump and it's going to 12K or 5K. Like, if you really want to make it in this market, right or wrong, whatever, you know, style you want to study. Like, dedicate some time to it if you really want to make it. You know what I've seen? I'm going to share this with you. And I love this because we can do this on the live stream. We can talk. There are a lot of people on crypto Twitter, and some of them are not, but most of these people that I'm talking about are on crypto Twitter. They spend most of their time and energy building communities because they feel like that completes them. As a trader, I honestly don't give a damn who follows me on Twitter, who follows me on YouTube. I've always said, honestly, like I put so much energy into trading, into charting, into reading, and this is just a way for me to journal. And it happens to be public. I'm a trader that YouTubes, okay? And yeah, there could be both. But there are a lot of people that cannot trade, cannot read a chart to save their lives. They actually lose money. They make most of their money on YouTube or from, advertisements on Twitter or otherwise. And you guys listen to them. You guys follow them because they have a high following. And you don't know any better because you don't know any better. What do I mean by that? If you were chart literate, you'd be able to look at what they say and, they're finely manicured, nicely manicured, YouTube videos and see, well, I don't know. Okay, that's a valid point. That's not a valid point. You don't have the skills to be able to critique their analysis, their work, because you have no clue. You have no choice but to just, pick and choose and just take whatever somebody tells you, even if they don't know how to count waves and they claim to. So many of these people I see all the time, and I don't have time or energy or even the interest to say, oh, that's wrong, this is wrong. Like, that's not where I put my energy. But you have people counting waves, impulsive waves, left and right. Like, they'll be like, oh yeah, there's the fifth Elliott wave isn't in. They'll do something like that, like, and y'all, like, because they say Elliott wave and like hashtag Elliott wave, you'll be like, yeah, this guy, all right, okay, when by sir or something like that. It's just like, and it's not their fault. It's your fault if you don't know any better. It's the 2022. There's so many resources. There are enough people that know what they're talking about. You have Bob Prechter that spent 20, 30 years of his life pouring into Ralph Nelson Elliott's work and compiling it into 14 editions, 13 editions of the wave theory. If you don't know Elliott wave and you don't know how to count an Elliott wave, it's on you. Because that book costs $10 on Amazon, right? That book costs $10 on Amazon. Obviously, it's not the most digestible material for beginners, but there's such a thing as Elliott waves made simple. There are tutorials on YouTube all over the place, people breaking it down. If you don't know any better, you don't know how to read a chart, the fundamentals, and you really want to make it in this market, that's on you. That is on you. That is on you, my friends. So yeah, please do your due diligence. Don't listen. You can listen to me if you want, but if I fuck up and you disagree, that's fine, but that's not my fault, right? That's your fault if you push the button to buy or sell, right? You have to take responsibility, but more importantly than like whose fault it is, take responsibility, take your education. Like, there's so many influencers and quote unquote Twitter traders that don't know anything about charting. They don't know anything about it. They spent most of their time trying to build a following and shield things. I don't think they're necessarily dumping projects on people. I think that's a lot harder than people think it is. You actually need quite a massive following to buy in and then to dump on them. But it's just like, who doesn't want to be followed and lauded and stuff like that. And then people selling courses that don't really know how to read a chart, right? They use a little bit of this and a little bit of that. They don't know much about Elliott wave. They know enough to count 5 waves, but not really. That's on you. That is not their fault. They're doing what they did. And one of the reasons that they're popular is because they happen to buy Bitcoin at, towards the middle of a market or towards the bottom of a market, and they held and they cashed out somewhere close to the top. So they got a lot of money. And so because they have a lot of money, that lends to their gravitas, that lends to their cachet, right? People think, oh, they must know what they're talking about because they made it. But they literally don't know they can't read the bottom of a market or a reversal. They don't know. And they say nobody knows, right? Nobody knows. It's impossible to read a market. Like, no. People literally dedicate 20 hours of the day for years trying to read a market to a high degree of probability. And there's people that are able to do that to a high degree of probability. Just because you don't do that and you can't conceive of that being possible doesn't mean it's not possible. Just because you don't do it, right, and you can't do it doesn't mean nobody can do it. That's why I like to say I don't have a crystal ball, but maybe there's a trader out there that's so good they fucking have a crystal ball. Okay, so yeah, that's on you guys, and I really hope that if people are following this channel, they're getting something from it. Not necessarily my calls to go up or down, but that's why I just like to share, how I see the market and kind of the backstory, how I'm learning, because that is really the superpower here. If I can show you my positions, and I don't care to, but I can show you my positions. I can show you positions that are up 170%, and multiple positions up 190%. And that's nothing, because I think we're at the bottom of a market. We're at a major consolidation reversal. I don't plan to touch those. And you can say, oh, wow, look at those gains. You must know what he's talking about. No, I'm guessing. It's educating guessing. And I'm doing that process with you every day using this forum, right? So, yeah. That's my kind of rant on influencers and people with money that don't really know how to read a chart. And you'd be surprised, there's a lot of them. And why are people surprised? Because a lot of them run hedge funds, crypto hedge funds, and a lot of those crypto hedge funds got liquidated because they couldn't read a chart. And I'm not saying it's easy, but it is not easy whatsoever. Easy to get things wrong, but when you have all that money and you have all those resources, like, there's such a thing as risk management. So as a professional, I don't have most of my money tied up into leverage, because if I'm wrong, I get wiped out. Like, I guess I have to get a job, and I don't even know if I'm employable. Once you start working for yourself, it's really hard to get a job. At least in this market. Like, I just have a bunch of random skills. I just don't want to work for anybody. So it'd be really hard for me to get a job, like a real job. So yeah, that would be a disaster. But risk mitigation is I have a bunch of spot positions and some leverage positions. But yeah, anyway, I'm rambling. This is, I believe, the next big move. Okay, we've been looking at Bitcoin. Now let's look at some other stuff, and maybe some stuff is run. Let's see. On our watch list, Kadina's up a bit. Still hasn't broken that resistance. See, this resistance right here is really what we're interested in. Like, we've been testing the tops of this move right here for quite some time. We've been testing the top of this move for quite some time. But what we're interested in is a break of it, okay? That's what we're really looking at. That's where we think, the big move is coming. That's what's important. Not necessarily testing the top of it. Let's see. Ethereum looking solid. And, people trying to be smarter than the average bear. The merge, this, that, and they're selling, you got Phemex. Just because people have a lot of money doesn't mean that they know what they're doing. Go on Phemex. You see how many shorts have accumulated for Ethereum? They've been accumulating, and people, that selling courses on Twitter, once again, tons of followers, good for them. But, they're laughing, and, how they do it on Twitter. They have to troll, or else it's not Twitter. Oh, man, the bulls are going to... these noobs buying into this market, ha 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 ha, like, dump it, right? You're at resistance, and you've been testing resistance in a very bullish way. What do I mean by bullish way? You're basically testing and making a higher low every single time you retest. That is freaking bullish. And that's like, charting 101, but whatever, I'm not complaining. I don't want anybody to get wrecked, and I don't celebrate anybody's losses, but, it's a zero-sum game. And if they're so convinced and they want to sell, who am I to stop them? But yeah, I got into an Ethereum long recently, and it's doing really well. It's just, the market's been down for like, 400 and been in a corrective pattern for like 450 days. I don't know why people are so enamored with trying to sell after a 450-day correction. Like, really? Like, what trend ever goes down forever? You know what I mean? Like, there's no trend in existence that goes down indefinitely. Like, it just doesn't work that way. And I mean, just looking at, so like people like Garrett Soloway who don't know how to use a log scale. I'm sorry, but like, come on, dude, you're a pro. He's pretty good, but like, it's just shocking how people don't know how to use or when to use the log scale, and they've made it so far, and he's doing pretty well for himself. But he's saying lower lows. He doesn't recognize this macro bottom, right? I mean, it just, look at this. How it's a textbook bottom, and if you look at this, it looks like a textbook zigzag or zigzag correction, right? So look, you had this. This is a flat correction. You know anything about Elliott wave theory? You know it's a flat correction. I'm on the log scale so we can measure it and not worry, okay? You take your Fibonacci extension tool. This is basic Elliott wave theory. If you learn your craft well enough, all of this stuff is not too difficult. You take the A wave right here, these three waves down, your retracement of the B wave and the C wave, and what do you target? Your 1618. That is a typical extension of your C wave in a flat correction. Okay, you can target the 1 to the 1 2 3 6, but if you're going deeper, you'll target the 1618. That is one way you can know that, okay, the bottom's probably in. Then, if you just want to look at the impulsive portion of the correction right here, okay, this is the impulsive portion, the down only portion, right, the C wave. Here you can see it's a zigzag. Okay, this is a flat correction and this is a zigzag. So once again, you can measure the top, okay, the top of the first part, which is the W, retracement of X and Y, and once again, what do you see? Again, this is why you learn your craft. It's not for followers, it's not for nothing. Obviously, if you learn your craft properly, you can just make it, you can earn a living, you can be profitable. You don't have to wait for YouTube to monetize you. You don't have to wait for followers. You don't care. I honestly don't give a damn who follows me. Most of the people who follow me, I know, are serious about learning and serious about the markets because they can tell I'm serious about the markets. I'm a trader that happens to YouTube, not the other way around. I do some production. I have fun with it. If I'm going to do it, I try to do it well. But at the end of the day, I'm most concerned with getting these reads correct, right? Because this is my livelihood. Again, you see your phi ratio, your golden mean, 1618. This is what you're targeting in your WXY. It's a three-wave correction. Corrections come in flavors of three. Here you have WXY. You go on the large time frames, you understand that this correction is over. Just because it's a daily time frame doesn't mean it's any different than the hourly or 4 hourly, like you were doing intraday trading, right? Beauty about Elliott wave, it's time frame agnostic, right? So you can see all of these fractals, these patterns on any time frame. There's so many things indicating a bottom here, okay? Let's zoom in. So we just found two reasons, right? Hitting the phi ratio, both in the flat correction and in the zigzag here, okay? Now, a third main reason why this is a bottom is, well, there are many, but you can count 5 waves in this zigzag, okay? Because you have you have a few zigzags here, and that's a tricky part, but you had actually what's called a double zigzag here, okay? So you had a zigzag, and then here you had a zigzag too, which is, it's tough to read. Don't get me wrong, this is tough to read, but that's a zigzag. But you can count 5 waves in this move, so that'll tell you kind of that this trend is finished. But that's a little more involved, and that I think is a little. Not many people are going to be able to make that read. But I'm just looking at the main kind of more simple things, right? So we just pulled the Fibonacci retracement levels and stuff like that. But just looking at this move, say you don't know anything about A/B basing, but you can see a range that is making a bottom and making a progressive higher high. Well, like, what's that tell you? Like, you don't know anything about A/B basing, but you know reversal patterns usually look like W's, right? Like, what the hell does that look like to you? So, like, people like serious traders like Gareth Soloway, who I respect and who have a good track record, right, in the stock market and in crypto, calling for a lower low. Obviously, you know, nobody has to be 100% right to be good at what they do, right? I've been wrong a million times. But, like, what are you seeing here, right? What are you seeing here where you're like, yeah, this is coming down, you know? I don't know. Especially since you've been making this move and this trend is clearly not finished. I mean, just turn on an indicator. Let's turn on the momentum indicator on a higher time frame, on the weekly time frame right here. You see that you're just now starting, you haven't crossed bearish at all on the weekly time frame. So you still have a ways to go right here, right? So I just don't see it. Anyway. We're really bullish. We're really bullish right now. And yeah, it's a great feeling. It's a great feeling. Still, I'm excited now, but we're at the neckline. I'd be more excited when we break that neckline. I'm looking for a break. Same in Dodo. I'm looking for a break. You can see it all over. Sounds like a song. Here, let's get the... Where's this? I hope you guys are doing well. If you're at your job, whatever, hope it's going well. Hope everybody's happy. So yeah, this is the main resistance we want to break, and we've tested it a number of times. So we're looking at Dodo here, but you can see the same story throughout the market, right? This is your left shoulder, this is your head, this is your right shoulder. These are bullish patterns. You see in Bitcoin, you have some sort of cup and handle, but in Dodo, and other assets, you have sort of inverse head and shoulders. And you have that actually throughout the market. Here, I'd say in Ethereum, it's more of an inverse head and shoulders as well. Yeah. But these are bullish patterns. Obviously, no pattern is 100% in one way or the other, okay? But, like, this tells you a lot about a high time frame reversal, when on a high time frame, you're seeing a bullish pattern that's likely to break out bullishly, okay? And the targets for them coincide with a typical wave 3 projection of the 1618 to the 2 Fibonacci extension. And you can just take the technical target, this is Litecoin by the way, from the bottom of the head to the top of the neckline, superimposed from the side of breakout, and you're getting into that region, right? So again, I really don't see high time frame bears what they're seeing, right? And I just don't get it. Like, this is very bullish. Yes, it's taken a while. Yes, you know, we've been consolidating, going sideways, but like we talked about 52 days in Bitcoin. How about 90 days? 90 days consolidation in Dodo and a lot of altcoins. 90 days. What do you think going sideways for 90 days, what do you think that's going to yield, right? With like the larger context, everything is contextualized, right? You want to be able to go on a high time frame and say, well, just because you consolidate 90 days doesn't mean you're going up, right? Just because you're sick of the market going down, it doesn't owe you shit, the interesting thing about this is that you're getting, you're able to read these market moves, right? You're able to read bullish divergence here, right? Where this high is right here and this high is, is right there. And you're able to read 5 waves down here, just in this portion. So you know at least the local downtrend is exhausted, right? And this chart is kind of truncated. This asset's too young, but you then this is where you correlate with Bitcoin, and you use Bitcoin as a proxy for the cryptocurrency market's channel, because a lot of these assets are so young. You don't have full charts. You can't even count their entire bear market, right? They came out during the 450-day bear cycle. So yeah, it's exciting. You're at crucial resistance for all of these assets. We're at crucial resistance. And the question is, are you finally going to break out? Is the 4th time a charm, right? Because in this consolidation here, you tested it once, twice, 3 times, 4 times. Here it would be the 5th time, you know? It's very likely, very likely, very, very likely. Yeah. So I think the smart thing, the name of the game, be it Bitcoin or anything else, you just accumulate the hell out of your positions here. Like this was the hard work right here. Honestly, for the next, let's see, we're in August, February, 5 to 6 months, my work is going to be taking profit strategically. That's going to be my work. Maybe I might get into some, I may get back in, build some new positions at wave 2 corrections, because wave 2 corrections are, by definition, they're sharp and they represent a good opportunity to buy back in. But after the first wave 2 correction to the 618, I'm really not getting into any new positions, because all my positions will have been built there. And you have to understand why I would do this. It's not because I don't think the price is going to go up higher. It's because I'm mitigating risk, right? The later you get in on a move, the more risky it is, right? So you got into this move here, you go up, you come back down. This is your last chance, bottom of the wave 2, to get in very safely. And then you get down, you let it ride. You don't get into wave 4. That is risky. You can if you're scalping, but that's risky, right? You want to get in bottom of wave 2 at the latest. So yeah, that's basically my strategy on the high time frame as well. Guys, don't forget, like the stream if you are here. Hope you're having a great Wednesday. Subscribe if you're not subscribed. And yeah, I'm just so excited for this move. I'm so excited for this move. I think it's coming any moment now. Got a nice candle to the upside. Let's get into the smaller time frames. See what it looks like. Okay. So what it looks like to me is you're probably going to consolidate here for a little bit in this this mini wave 4. So I'm seeing it like this. Right, something like that. But, any of these waves can be extended, so who knows? But yeah, up is definitely where we're headed, I believe, and it's going to be very interesting once we break that resistance. Going to be very interesting. Let's see if anything has done so yet, right? Because sometimes there's certain things that lead the market. Nothing yet. AVA is back at its resistance. Yeah. So everything's at resistance now. Like, so the whole market's going to explode because it's basically everything is testing this important resistance. Breaking it is going to be, I mean, like if you're bearish here, it's very, very, very risky. Bearish on anything, not just Bitcoin, anything. Everything's basically on the starting blocks for a move up. Okay? In terms of timing, I mentioned this during the live stream yesterday, and let's stay on AVA. I believe that's how you pronounce it. Correct me if I'm wrong. But let's see. Anybody else on the chat? Guys, don't forget to like the stream. Rich, what's up? Total agreement with your TA, says Rich. Yep. So yeah, if you are thinking, how long will this last? Okay. The Brecca kind of asks, how long do you think the news will affect the price? I responded in long form that I didn't think that the news was necessarily affecting the price. Look at my videos for the past few days. I've been looking for this move, and I don't know anything about econ, and I've heard people talk about the CPI, but we've had CPI announcements before. I really don't ascribe this move to that, right? There are fundamental technical reasons why this move is kind of in effect right now. Anyway, my sense or my whole point in saying this is, in terms of timing, I think it's interesting that the full moon that is slated on the 11th, which is tomorrow, is coming. And at this point, the full moon represents the nadir of a larger move, okay? The full moon represents the nadir, or the bottom of a larger move. You can see it here. Full moon, full moon, full moon, full moon, full moon, full moon, okay? The full moons typically give you a bottom. Research shows, and there's serious research done on this. If you don't believe it, just do a Google academic search. There are actual papers, academics, people talking about trading lunar cycles. And between 0 to 3 days after a full moon, and typically the third day after a full moon, you tend to get a markup in price. Now, given that you're looking for a nadir on the full moon or close to the full moon, we may hang out at resistance for one more day and make this the nadir before the move up. Okay, that's a possibility. It's also possible that, just playing off of the full moon indicator and the probability that you do get your nadirs on the full moon and close to the full moon, we can go up now and then pull back slightly for 3 days, right? Until the 14th, at which point we get our full moon nadir on the 14th, right? I think those two scenarios are likely. Right now, I'm more in the camp that we move up, then pull back for 3 days. Just a minor pullback for 3 days before we move up. And specifically, just going back to Bitcoin, I think that we get this pump of wave 3, okay? So basically, here I'm counting the primary wave 3, so these are intermediate waves. So intermediate wave 3 pumps into the full moon, right? And on the full moon, on the 11th, so tomorrow, we get a drawdown or a pullback, a slight pullback, lasting 2 to 3 days. And then on the 14th, on the 14th or 13th, then we get continuation into wave 5. And wave 5 is extended. That would really work. That would really work. That's what I'm seeing. I think that is a likely scenario, and I guess I really like this scenario because I've been saying that it's likely that when we do make this move, we go and make the higher high, right? We break this and really establish the up only mode. We establish the new uptrend by making a clear higher high before pulling back. I think that's likely. Okay, we'll see. I think we'll see today. And this is what I said yesterday. A lot of theories have been floated out by myself and others about what the market's going to do, what price action is doing. But what I love about technical analysis, what I love about trading and charting, that you'll eventually see. We'll see, what theses are correct, who reads the market accurately and who doesn't. I love that. And so, yeah, we will see. If we break resistance, we'll see. We'll see if people calling for lower prices, 12K, 3K, all that stuff. We'll see if we get rejected by this resistance once again and just nuke to the bottom. We'll see. The market will show us. So just have to wait. And we shouldn't wait too long because, as I said in yesterday's video and the day before's video, this is the moment of truth. Time is now. Or what did I specifically say? I said, this is it. I said, this is it, and this is the moment of truth. Yeah, those two titles. So, yeah, exciting. All right, that's pretty much it. I mean, I talked about the moon phases. I talked about a bunch of things in the watch list. I looked for early movers. Nothing has yet to break that resistance. Just going into the general watch list. AVA is the biggest mover, but it's still yet to break that resistance. Uniswap did. But it broke it some time ago, which is interesting, right? This major resistance right here was broken. This major resistance was broken. That major resistance. Uniswap is leading right here. Interesting. Yeah. See, AVAX at resistance, looking to break it. It's very likely. It's highly probable, more probable than not, that these resistances are broken. And what I don't understand, people who read markets for, professionally or on Twitter, right, semi-pro, how do you not see the rounded bottoms? Like, everybody talks about rounded bottoms signifying changes in trend. Like, these are literally like textbook rounded bottoms. Like, look at this. Like, that's textbook in PYR. Textbook rounded bottom. Same in Avalanche. Textbook rounded bottom. That's likely VeChain. Textbook rounded bottom. That's likely the end of that trend. Right? ETH at our resistance. So yeah, that's it. I don't have much else. Guys, happy CPI day, we want to call it, or pump day. Hope you guys are well. Have a great Wednesday. Yeah, and let's enjoy this positive price action. All right, take care. See you guys. Don't forget to like the stream on your way out. Bye.